let's break down two important concepts that are often used in financial compliance: source of funds and source of wealth. These two terms sound similar, but they have key differences. In this lesson, I'll explain what each term means, why they are important, and how to clearly explain them in an interview setting. First, let's talk about source of funds. This refers to the origin of the money involved in a particular transaction. It's about where the funds you're using in a specific deposit, transfer, or investment come from. For example, if you're depositing $2,000 into your account, the bank would ask, where did this money come from? Is it your salary, a loan, or a business sale? Example of source of funds: salary from a job, proceeds from selling a car. For example, let's say a customer deposits $2,000 into their account. The source of funds could be their salary, or they might have sold a car and deposited the proceeds. The financial institution wants to make sure that these funds are legitimate and have not been derived from illicit activities. Now let's move on to source of wealth. This is a broader term. It's not just about a single transaction, but rather the overall origin of the money or assets a person has accumulated throughout their lifetime. This includes how they earned or received their wealth, whether through employment, business profits, investments, or even inheritance. Example of source of wealth: career earnings, real estate investments, inherited wealth. For example, if someone has accumulated a significant amount of wealth, say $1 million, the source of wealth could be a combination of career earnings, real estate investments, and maybe an inheritance. Financial institutions will look at a person's source of wealth to understand the legitimacy of their total wealth, ensuring it hasn't been gained through illegal activities like money laundering. Key differences between source of funds and source of wealth. Source of funds, specific to individual transactions. Source of wealth refers to the total wealth accumulated over time. So, what's the difference between source of funds and source of wealth? Well, the source of funds refers to where the money for a specific transaction is coming from. It's more immediate and short-term. On the other hand, source of wealth looks at the bigger picture. It's about how a person has accumulated their wealth over the long term. Now, if you're asked in an interview, what's the difference between source of funds and source of wealth? Here's a simple way to answer. The source of funds refers to where the money involved in a particular transaction comes from, such as salary, sale of property, or business revenue. It focuses on the specific transaction. On the other hand, the source of wealth is the overall origin of a person's total wealth accumulated over time, including income from career, investments, or inheritance. It gives us insight into how someone has built their wealth over their lifetime. To sum up, both source of funds and source of wealth are critical in financial compliance. Source of funds ensures the money you're using in a transaction is legitimate, while source of wealth helps verify that a person's total wealth has been earned through lawful means over time. Understanding these concepts will be vital for your role in KYC, AML, and financial compliance.